we are their path to some level of economic prosperity for them and their families. That responsibility is massive. And one we take very seriously. And if you keep that top of mind as a leader, it informs your decision making in a way that I think is super positive and super powerful.
Greg, welcome. Thanks for coming to sit down with me today.
Thanks for having me.
Everyone, welcome to Teague Talks, sitting down with Greg Kennealey, CEO of Peregrine Hospitality. I guess I should say welcome back.
Thank you. It's great to be here.
Second time we've done this.
Second time's the charm.
We did one of these already, but who is Greg Kennealey? How did we get into the hospitality business? Give us the short Cliff Notes version. Maybe I'll tee you up. Born in Connecticut, black sheep of the family, went to Notre Dame instead of Boston College.
Very much so, yeah.
So, and then where?
So I worked in the technology consulting industry, which makes no sense. But I did that right out of undergrad for a number of years. Was fortunate to go back to business school at Kellogg out at Northwestern, where I studied finance and real estate. Got into real estate private equity at LaSalle Investment Management in Chicago, which was great foundational experience, office, industrial, multifamily. But was fortunate to stumble into an opportunity to meet Lawrence Geller, who was the CEO of Strategic Hotels and Resorts, at the time Strategic Hotel Capital. And a long cat and mouse game of chasing to get finally 20 minutes with him in his office. I'll never forget, his assistant was so sweet and very patient with me as I continued to badger the heck out of her for that 20 minutes. I met with him in sort of a career mentor type conversation. At least that was the framework. My not so subtle agenda was get a job. And he gave me 20 minutes, running around with his hair on fire. And then he basically said, "Thanks, nice to meet you." And I said, before you go, like, I just want you to know, like, if there's ever a chance to work here, I'd really welcome the opportunity to apply for a job. And he said, "You seem like a very nice young man, but you don't know shit about hotels. And so I have no idea what you could possibly do for us," which is, that was flattering. So, but he said, "But if you want, I'll introduce you to our chief operating officer, Richard Moreau. His office is down the hall. And if you can convince him to hire you, I won't object." Awesome. Yeah. So
raving endorsement.
Yes, exactly right. So Richard Moreau was crazy enough to take a chance on me. He's been a wonderful friend and mentor ever since.
How old were you at this time? How old were you?
I was 33.
Okay. Yeah.
32,
yeah,
33.
Begging for a.
Yeah. And so anyway, I got into the hospitality industry late, and then which sort of started the love affair. I'll never forget. I was on the phone with my wife about it, Ritz-Carlton Laguna Niguel, in this like unbelievable resort, right? We're in a conference room overlooking the Pacific Ocean. And they're having a discussion with world-class designers about how to redesign it to make it better. And I've never even been inside of a hotel as nice as it was pre-reno, right? Like a Holiday Inn was a massive event for the Kennealey family growing up. And so I was like, and then we eat at a Michael Mina restaurant, which they then critique, right? Because they're thinking about changing it from Stonehill Tavern to Bourbon Steak, which we eventually did. And I was like, I can't believe they're paying me to do this. Like, I'll do whatever you guys want. Like, if I get to work in these environments and have these conversations, it was unbelievably stimulating. And I had the chance to work there for almost 6 years.
Well, that was strategic. And Lawrence Geller was one of the, I don't know, pioneers, but one of the icons of the industry. So you're fortunate, right? It's not
incredibly
who
fortunate.
You work with. So you're fortunate to work with him, learn from him.
Yeah, a tremendous learning opportunity. Some of the best hotels and resorts in North America. And they had a very aggressive approach to value creation, which, I was a junior guy with the laptop running around, but incredible learning experience, tons. And then GFC takes the stock down below $1, publicly traded company, a lot of pressure to reduce payroll. I joke, they were paying me so little that I didn't move the needle, so I got to stay. But then all of a sudden there was nobody doing the work. So actually they put me in charge of things, which was crazy. And all of a sudden I'm running their international portfolio, which is hilarious, as well as a number of properties in the United States. And, it just sort of worked out.
Right place, right time.
Yeah, absolutely dumb luck.
So how long did you stay with Strategic? Because I'm going to repeat, below $1, stock price below $1.
From like high of 24, 25 down to that, and the good news is that I joined right before we had our first child. So like no pressure to hang on to the job.
So that was
nice and relaxing for the Kennealey family.
Okay, so that it comes to an end. Strategic, which is still a fantastic company.
Absolutely.
So then what?
So Strategic and KSL Capital had co-invested in a number of deals together, and when Strategic raised their Fund 3, they were looking to expand their hotel asset management team.
Yep.
And long story short, I caught wind of the job. The folks at Strategic encouraged me to apply for it because they knew that would be a better place for my sort of next phase of my career growth. There were no additional opportunities to move up in Strategic. And then Richard Moreau, the COO, called Mike Shannon and Eric Resnick and said, essentially, hire Greg, which was incredibly fortunate for me. And I've been part of KSL ever since. During COVID, we had the conversation around, okay, what are the things that are going to take off post-pandemic? And historically, select service has sort of fallen the least and bounced back the fastest because of the efficient operating model, et cetera. And so that turned into a business plan, which then turned into Eric Resnick, who's the CEO of KSL, and I having several conversations, which ultimately led to, like, I want to go do this, will you back me? And they said yes, which was great. And so I had never led a startup, they'd never really backed one before. So it was a wonderful set of lessons learned for both of us, but it was very much a startup, admittedly a very well-funded one, but a startup in a lot of ways. It was like, go find an office, come up with a name, set up a website, hire up a team. Like it was a wonderful, incredibly challenging, super exciting. We had some of the few startup moments, but hired up an awesome team. Many of them are still part of Peregrine today. So it was very difficult, but very fun.
Well, you mentioned
we bought 33 properties, a lot of them with your help. Plug for your organization, but yeah, we bought 33 hotels in under 3 years across the country, about $1 billion worth of real estate, and so it was quite a journey.
So I'm gonna I got a bunch, but one, you mentioned the name. I love it because there's a story behind the name. It's close to your heart.
Yeah.
So tell me that one again.
Sure. So we struggled. If you've ever named something, it's a nightmare, right? Because all the good names are taken and trade lawyers and all this stuff. And we did contests and we hired a marketing group to help. And it was like, we were like 6-7 months into this thing and we had no name, which made it challenging to recruit. And I just sort of said, the hell with it. And I'm going to just figure this out on my own. And I was really struck by our industry in general because, as you know, like there are so many people in our industry, the majority of the people who work in hospitality are in that first or second rung of the economic ladder. And we're providing a path to economic prosperity for people who, honest, smart, and hungry and kind of climb. And this is especially true in the select service space because there's all these families that own the smaller select service hotels and the motels that are all across this country, many of whom came to the US with nothing, scraped and clawed and bought their first motel, and now the second or third generation, in certain cases, owns quite a few.
Yeah.
And it's just a remarkable story. And I was struck by how that, frankly, ties back to my family and a lot of other family stories here in America, which is, my grandparents came to this country as Irish peasants with nothing in their pocket and, worked in jobs like laundromat, short order cook, housekeeper, and mechanic, and scraped and saved. And my parents were the first in their families to go to college. And, my brothers and I all were very fortunate to go to not only college, but grad school. And that is the same story that I see in our industry. And so Mission Hill's the name of the neighborhood in Boston, where my dad's family landed from Ireland, like a lot of other Irish immigrants back in the late 1800s and early 1900s. And the story of that neighborhood continues today. The ethnic groups have changed over the years, but it's very much still a little bit of a gritty landing spot for people who then, climb and make a better life for themselves. And so the idea of selfishly sort of tying that, which means a lot to me, to the business that does that for so many people, it just made sense to me.
No, I love that story. That's why I asked.
Yeah, I appreciate that.
Thanks for telling that one again. So how has the world changed from 22, when we sat down 4 years ago,
just
to
a little.
Today? Exactly right. Isn't it
just a little?
Isn't it fascinating how?
It's remarkable. If you learn anything from your time in hospitality, it's that whatever you think is going to happen is wrong, and the need for agility is paramount, right? And so interest rates went up 550 basis points. They've settled back down since.
Yep.
We had huge inflationary pressure, right, on wages and everything else. We've had lots of sort of geopolitical turmoil and challenge and negative impact on inbound travel to the United States. Once COVID was over, we were expecting all this inbound travel, and then the world changed in a lot of ways, and the next thing you know, we're insulting all of our allies, and people aren't coming here anymore, which is really painful for the travel industry. Tariffs are impacting what we can do from a supply chain perspective on everything from food to couches, right? So it's keeping us busy. It's keeping us busy, and all of those things are impacting travel patterns, and so we have to be very mindful of how that's going to play out for our guests, right? We're about to have World Cup. Is it going to be what we expected? Looks like not. And anyway, so yes, so lots of challenges.
So how is that impacting your investment thesis today? What are we doing? Are we buying resorts, drive to leisure, or are we buying limited service, select service?
Yes.
Yeah, exactly right.
Yeah,
urban core, not urban core, yes.
Look, I mean, we have the benefit of a fairly broad mandate, which is sort of U.S. hospitality real estate. And I would say that the parameters for that continue to be, I should say, branded franchise select service hotels up through 4.5 and maybe in a couple of cases 5-star hotels or resorts. But it's much more granular than that, because to achieve the returns that we're looking for and that ultimately the investors are expecting, each investment has to stand on its own merits. It's not just a macro,
right,
like let's go buy in bulk of this or that. And even at Mission Hill, it was each individual asset has to stand on its own merits. And the parameters of that are still, like the foundational parameters of that are still similar, right? It's fundamentally good real estate, right, from a supply-demand perspective. Yep. It's value creation opportunities where we have conviction that we can deliver them in terms of elevating operational performance, elevating investment performance, capital infusion, et cetera. And so we're continuing to do that across all three of those segments, and we're continuing to do that in a very selective way. So we recently took on the Westin Resort in Hilton Head. We also now have the Test, which is a boutique property in Atlanta, your hometown.
Love that property.
So, and a couple of others. So it's fairly selective and across all of those. But I would suspect that we would be growing at a faster rate as I look to the next 24 months versus the relatively modest growth we've had in the prior 24.
Right.
Part of that is market, but frankly, part of that is more about Peregrine's evolution and ability to be more acquisitive than we were before.
Talk to me about the integration between Mission Hill into Peregrine.
In April of 2024, Peregrine was born by integrating Mission Hill and another operating or platform company, management company, into what is now Peregrine, which directly manages or asset manages 62 properties across the US. And so that involved combining organizations, cultures, leadership teams, geography, technology, and that was quite a journey. Probably hardest thing I've ever done professionally, but also, frankly, the most gratifying, because you've got a good foundation in a couple of areas. You get to bring that together. You get to think about the art of the possible. And so we've been on that journey now for the last couple of years. As I mentioned, we added a few properties to the portfolio, and there's been a ton of hard work and leadership changes and all the things, but now we're in a position, I think, to grow more.
Yeah, so talk to me about leadership, because I think it's fascinating. So Mission Hill was fundamentally a startup. So you had to get office space, and then you had to hire a team from scratch. So that's
couldn't get the printer guy to lease us a printer because he didn't think we were legit and we had no credit. I almost had to buy the damn thing.
I wouldn't have trusted you either.
Yeah, fair.
And so you have to start from scratch and build a team, which is a trick. And then now, and that was in, call it 2020, now in 24, you have to merge two teams. That's a totally different skill set. So you have to bring, and now you've had a lot of changeover in leadership. You've got really talented people in there right now. Give me some thoughts and some background behind that.
Yeah, so it's because I was, sort of founder CEO of Mission Hill. It was very tempting to just sort of say, well, we did it the right way. Let's just sort of Mission Hill 2.0, which would have been a colossal mistake. Although it was tempting at times because that's just what I knew. But the reality was that we had a vision for a much larger organization that did direct management. Remember, Mission Hill did not. And so we were primarily acquisition asset management. Peregrine is acquisition management, asset management, and everything in between. And so the much broader set of capabilities required us to think, I guess I would say, more strategically about what we were doing and what we were trying to build. And so that involved a bit more thoughtful planning. And then as we looked at, okay, we want to have the core, the foundation we must have is best-in-class operations. And we have to do that recognizing this is the world we're in now in 24, 25, but more importantly, where are we trying to get to? And so we have added 4 new leaders to the executive leadership team. Kristen Richter is our Chief Commercial Officer, came to us from Fairmont Raffles. We have Heather Steggy, who's the Chief Operating Officer, came to us out of the quick serve restaurant space, which a lot of people raised a lot of eyebrows, but she's been absolutely fabulous and is bringing a really unique skill set and perspective and much more innovation, I think, to our business. Karen DeFulgo came to us out of Benchmark as our Chief People Officer, and Stacey Galligan, also out of industry as our CFO, came to us from Embark most recently, which is an accounting consultancy, but previously CFO of Pure Bar and Smashburger. And so it's been remarkable to get them onto the team and now see as they start to apply their playbooks and their experiences to talent and recruiting and people process systems, and it's been awesome.
I just have to emphasize this: 5 new outside female leadership team.
4 new. We had one. Catherine Hance, our Chief Legal Officer. But yeah, of our executive leadership team is 5 women and 2 men, which was not intentional, but is fabulous. As you know, I'm fortunate to have married up with a very talented, amazing woman, Shannon, and we have 3 girls. So in my household, this has been very well received. Dare I say, expected. I'm the dumbest guy around the dinner table, but it's been awesome to see. Yeah,
I love it, and they're believing in you as much as anything, and following your leadership, just like you were following Lawrence
very
before.
Much so.
So no pressure.
No pressure at all.
There for you. But you're doing fantastic stuff.
We are.
All right. So what the heck is a peregrine?
I get that question a lot. So the naming thing, I'm plagued. So
is this you in your basement again?
No. So the peregrine is a falcon. It is technically the fastest animal in the world. When it dives for prey, which I learned through this process, I did not know any of this. When it dives for prey, it can hit speeds of 240 miles an hour. And so we went through this whole process. We wanted to come up with branding and a new image and identity. And so we hired the consultants and we go through the process, and we spent 6 months, and all manner of people wanted an opinion heard. And then, and despite the dollars we spent elsewhere, we went back to the name that the marketing team recommended in the first place. So, and the idea was, we're Colorado based, so like a bird of prey kind of has the outdoorsy thing going. If you've ever skied Beaver Creek, there's a run named Peregrine, which is awesome, double black. And it speaks to agility and speed and all those cool things, so that marketing people, want to drive the brand pillars. So
they loved it.
That was the idea.
We just went to the exact same thing at Hunter, and same thing.
Yeah.
Same thing, full circle. Everyone had to have an opinion.
Yes.
I'm a groupthink leader in general.
Perfect.
And we ended up back where we started.
Yeah, so, but the really good thing was, and you know this from building a team and a culture, like everybody needs to get up in the morning and put on the same uniform, right? Like it's got to have the same brand name on the chest or whatever. And so that was a really important part of the integration of the business, and starting up the new parts was like, okay, you're not the blank division, like we're all Peregrine. Right, and then we get the cool swag, of course, which my daughters steal from my closet. So anyway, yeah, it's been great.
Yeah, because now you can put it on anything you want to.
Yeah, we got the water bottles,
of course,
right? We
pullovers, everything.
Yeah,
hats.
Yep.
Yeah, we got it.
We got it all.
We get the same.
We get it all.
All right. So what's the future of Peregrine?
So look, we are very fortunate to be partnered with a global private equity firm, and in the near term, we want to just be great at what we do in driving the performance of the existing portfolio. As we've expanded out our capabilities and our leadership team and so forth, I think we're now in a position to grow, like we mentioned. But the organization we're partnered with, which is global in scale, I think enables us, if we earn the right to do so over time with confidence, to expand geographically, It wouldn't surprise me if in 3 to 5 years we're outside of continental U.S. Potentially to Western Europe, potentially to Mexico or Canada, and so
Yeah, I can see that.
Yeah, so that would be I think a natural extension of a growing hospitality platform. But our focus for now is most definitely driving performance and growth in U.S. hospitality.
So you've now built 2 companies. Talk to me about your leadership style.
As everybody in hospitality knows, it ultimately comes down to the people, right? And so we have been incredibly thoughtful about who we hire into the organization. In fact, we talk a lot about the most important decision we'll make is who we pick as teammates. So we are very selective. Candidates describe our interview process as exhaustive, rigorous, a nightmare, whatever. But we take it very, very seriously. And so we're looking for, at every level in the organization, we talk about we want people who are honest, smart, and hungry. And when we talk about leaders, we're also layering on top of that several really important things. We're looking for leaders who frankly are incredibly capable, but whose natural style is one of humility. Because no matter what level you are in an organization, the work is ultimately getting done by the hourly employees. But we want people who philosophically align to the idea of a very demanding but very supportive coach, right? So it's more of a people first approach. It's folks who are going to keep expectations very high, but then are going to work very hard to help the people on the team to achieve to that level. And if you've ever worked for someone like that, you run through walls for them, right? You'll give that extra night, weekend effort. If you've ever worked for someone who is the opposite of that, it's pretty awful. And they say people don't leave bad jobs, they leave bad leaders. And so we're trying very, very hard to make sure that our leaders are the type that people want to work for because they know they'll be better at whatever they do as a result of working for that person. They'll get different career opportunities. They'll be encouraged to pursue them, very much like Richard pushed me to go take the job at KSL. We just had our leadership forum up at the resort in Silverado that we have up in Napa Valley. And that was the theme, right? Was this sort of character-centered leadership and a people-first approach to team building and team performance.
But I do think that's important because they are fundamentally following you. You're the leader.
Yes.
And they're following you. If they don't
Which
believe
is
you,
an unbelievable privilege and an awesome responsibility.
and I think to your credit, I'll butter you up, but I think you've been, one, very successful, but very bold.
Thank you.
Maybe unorthodox, and a risk taker. So I don't know when you know how to take risks and when not, but that's what they're following.
Yeah, look, a leader without any followers is just a guy taking a walk. And so when somebody puts their trust in you, right, they're trusting your character and they're trusting your competence. You have to know what you're doing, but you have to be a good human being. And what we talk a lot about is that, the 5,500 employees of Peregrine in our managed hotels, the vast majority of those, entry-level workers, right there, we are their path to some level of economic prosperity for them and their families. That responsibility is massive. And one we take very seriously. And if you keep that top of mind as a leader, it informs your decision-making in a way that I think is super positive and super powerful.
That's great. I think that's credit to you guys, to you personally.
Thank you.
I think it's credit to you that all these people are like, yes, let's go.
Yeah, look, I've been very fortunate to be surrounded by great leaders, and it becomes sort of self-perpetuating.
Correct.
Yeah,
and
which
people
is
follow
awesome to
them,
see.
and people follow them, and then we success, and then more people want to be a part of it.
Yeah.
And you keep going. You're managing all the Mission Hill assets, and I'm guessing anything forward that you.
Yeah. So currently, Peregrine manages 46 properties.
Right.
A select service portfolio, about 10 boutique properties, as well as a number of large resorts like the Sheraton here.
Do you like controlling your own management destiny?
I do. What's interesting about it is obviously the majority of our industry is set up where owner operator is separate.
Right.
And we have a structure that allows that to feel very much more integrated. I would define Peregrine as an owner operator for 2 reasons. One is the senior leaders co-invest in the deals. So we are an owner in a true economic sense. And the other is that our incentive structure directly rewards a meaningful percentage of our employees through direct value creation through the investment lens. And so by virtue of being in that space and having no other clients, right? We spend no time trying to pitch management business to other ownership groups. We focus exclusively on maximizing the value of the portfolio that's currently entrusted to us. And by value, I mean taking, sort of growing EBITDA from here to here. And that's how all of our incentives are structured. That is our singular focus. We call it our true north. But by having that owner mindset and that owner alignment and having that as a singular focus, I think over time, it just means everybody's going in the same direction. We can debate how to get there, but we have only one goal, right? It's not maximize the number of contracts under Peregrine, it's maximize the performance of the portfolio. And having an entire team aligned on that, I believe over time allows us to attract and retain better people and allows them to do their best work, as opposed to, if you're an SVP of operations, you want to go run hotels, you don't want to be pulled into pitches, right? As they would share with you if you were interviewing them. And so I think the cumulative effect of that is ultimately better results.
So
time will tell, but that's the thesis.
I just think it's a fun conversation, especially an interesting conversation, especially today, given today's world, because operations is tough, fundamentally. It's
brutal.
Very tough.
People who do that for a living are incredibly impressive.
Very impressive. And, hats off to Davidson and the other third-party management companies that are out there, because that's what they do all
and they
day,
do great
every day.
work, not suggesting otherwise.
Best in class, and they're really good at the complicated resorts that they're doing. So on one hand, you can make the argument, and lots of sort of private equity and ownership groups do. No, we're going to pass that to third party because they know what to do. We're going to go work on fundraising and investing and asset management. And then there are other people that say, no, we have to have control of this so that we can do this because we need to see everything that's going on and we can do it better. And this will help our thesis.
Yeah, I mean, look, at the end of the day, in hospitality, you have the benefit of a brand on your property if you choose to do that versus independent. But every single hotel in every single market that anyone could own has competitors by definition who are in the approximate same location with a similar competing brand, with similar amenities that offer sort of a similar guest experience. And so ultimately the only sustainable advantage that you can have in our space, there's no like black box technology or patent, it comes down to the people.
Right.
And so I believe very strongly that our model over time, and we're still very young, but over time will allow us to attract the best talent, put them in a situation where they can do their very best and reap the economic rewards that come from that. And I believe that the flywheel, if you'll excuse the overused expression, on that once it really gets going will be really powerful.
I think you're right.
I hope so.
All right, let's go back to the sort of the economy and your crystal ball and where we're going.
My crystal ball.
And
okay,
investment, which we've already said we're wrong. We've already acknowledged that.
We are completely
wrong. Already wrong. But I want to know what your investment thesis is for 2026 and beyond. Again, the world is sort of uber luxury, and that's where they're headed, and you guys are positioned there. But at the same time, you've got everything. So where do you think your investment dollars are going to go? Are you a bigger buyer today or a bigger seller today? How about that question? A lot of people are bigger sellers today.
Yeah, I would say we're bigger buyers.
Okay. Why?
Several factors. One is if you zoom out a little bit and you take a longer term view, which we have the luxury of being able to do, the hospitality industry has proved incredibly resilient. And if you look over, I think it's 60-ish years that we're looking at the data recently, travel expenditure is growing, our industry is growing faster than GDP, not just in the US, but globally over the long term. And so that is a tailwind that we really like.
Yes.
It's also really hard today to build, right?
Yes.
Development costs have gone up for a myriad of reasons. It's getting harder and harder for developers. And so there's a mitigant on supply at a macro level, market to market, of course, specific. And so those two things give us conviction to continue to believe in the long-term resiliency of hospitality. And whether it's a global financial crisis or a global pandemic, everybody at those points that travel's done, and of course, that was not true.
Right.
So we believe that despite the bumps we're experiencing now, that the longer term trends are very, very positive. And it's true, this time it was different. Luxury stayed super resilient and everything else didn't, which is remarkable. We don't want to overreact to that and put all our chips in on a trend that is now, sort of towards the top of the curve. And so we will probably be selectively contrarian.
Give me more.
Look, the luxury properties that are for sale today, and you would know better than me, I mean, they're trading at unbelievably low cap rates.
Yes.
And the only way you can justify that, particularly if you have opportunistic capital, is you have very lofty growth expectations,
Yes.
which is a general rule we would not
Or a long-term
feel comfortable.
hold, or a very long
Longer term hold or a lower cost of capital
Right.
can get you there, and those tend to be the buyers, and that's not the world we're in. So if we're going into luxury, we have to have that real value creation belief in this is, there's a different opportunity here that maybe others aren't seeing. There's a real estate play, there's an expansion opportunity, there's ways to additionally grow and amenitize the property differently. But it goes back to, do we have the ability to operate this fundamentally differently to drive real EBITDA growth? And the answer to that in many cases is no. And we just have to have the discipline to take a pass. But where we see it, we'll lean in aggressively. So we continue to look at drive to leisure markets. We continue to look at urban locations, but we're very careful around municipal risk, or whatever the term is, right? We want to be in places that are business friendly and travel friendly. That's obviously really important to us in what we do. And so we're looking at a number of markets across the country, but it ultimately comes down to the individual asset. And so you can have all the academic theory, but you actually have to find things where the stars line up. And our acquisition team, led by Mike Wilbert, the other gentleman on the executive leadership team, probably look at, roughly 100 deals, bid on 5 or 6, maybe buy 1 or 2, like rough ratios to give you a sense for that. So it takes a lot of work to find the ones we really want.
So that's been that metrics have been the last, I'll say 3 years, which has been tough. Do you think it'll be more bullish on that this year? Do you think you'll get more deals done this year? I think you will.
I think we will. Yeah, we're seeing, and obviously, again, given what you do, you see it as well more than we do. But we're seeing the pipeline of the opportunities like we're excited about growing, and we are in active pursuit of 2 right now that I think will close here over the summer and under LOI. And so that happen to be in a drive-to leisure market.
I was going to say, tell me about as much as you can about those.
Yeah, drive-to leisure market. We believe operational upside.
Select service?
No.
Yeah.
Full service.
We can find it any select service, because in your last sort of dialogue,
we have. We've bid on a number in the last 6-8 months, and we come in second or third on a lot. But again, the only deal we don't want to do is a bad one. So like if we don't win, that's okay. Better to lose than buy something we regret. So happy to stay disciplined on that.
We talked about this before, but the transaction market is as active as it's been in 3 years.
Yeah.
Okay, which is great to see. Which is fantastic. There's some interest rate relief. There's plenty of debt out there, plenty. So that's not the issue.
That's been helpful.
And people kind of understand where value is today. On the luxury side, they're still finding that out because those haven't been on the market. So they're still figuring that out, in my opinion.
Correct.
Give me some other theses that you like, whether it's markets or asset class or something that you like leaning into. And again, in my brain, I'm thinking you've got Napa, you've got all the other ones that you've said. You've also got like AC and Clearwater. Which one do you think you're going to buy more of in 26?
So we have found a few other coastal resorts that we've taken a hard run at. Westin and Hilton Head is an example of one that we got over the goal line, and
congrats.
But that's an example of a hotel in a supply constrained market, lots of drive to leisure demand, where we saw a pretty material value creation plan. It's the better part of a $40 million renovation that we're about to embark on there.
Right.
That will really elevate the positioning of that property and do very much what we did here, right? Which is make it even more attractive to groups, ideally higher rated, and then layer in the smart leisure customers, and manage those segments. So that's a wonderful example of what we'd love to do more of, and we're trying to find those. In the select service space, we will continue to look for those hotels that are, AC Clearwater is a great example of this, where there's operational upside and there's value creation through things like F&B, right? There's the I guess non-prototypical premium branded selects that are operationally select service, but the guest experience pushes into a pretty nice full service right? Experience, right? It's a comfortable room. It's got some level of F&B offering. It's got a decent fitness center, fast Wi-Fi. Like, for a lot of people, that's great. Like, I don't need to pay more for things I'm not going to care about or not going to value. And so I love that positioning because I can also flex with the seasonality, right? The customer in Clearwater in March, April is different than August, right? And so you flex your pricing accordingly. And in those boxes, that math continues to work really, really well. So I continue to have a love affair with select service. I think it's a fantastic business because the value proposition to the guest, when you deliver it right, is really excellent. And that customer can be as satisfied with that experience as the customer paying a much different number to stay at our Fairmont up in Del Mar, California, where they have access to golf and equestrian and spa and everything else. And so you just have to know your customer and make sure you're lining up your product accordingly. And so we're looking for both.
I love that. And I think there's plenty on the market right now that you can go buy. There's plenty of really new, shiny, nice, limited service, select service assets out there that you can pick up.
There are.
They're not cash flowing today at the levels that the sellers want at the replacement cost.
Sure, but that may create opportunity for us.
I think there's a lot of opportunity there.
The one, you have to remember that the legacy of the organization, if you go back further, was in the operationally complicated.
Yes.
It was in the larger box. It was looking at all aspects of the real estate, how to make that work harder, how to drive profit out of each individual department as if it were standalone, and bringing that discipline to bear. And we do that at large resorts like this one. I know we'll take a walk in a little while, but the DNA or the playbook of that continues to run deep. I mean, we have the most unique hotel or resort in all of, I think, our history at Camelback, which I'm heading to later this week out in the Poconos. But it's like the most successful ski hill in the state of Pennsylvania, with a conference hotel, an indoor water park, an outdoor water park, 9 food and beverage outlets, like zip lines and mountain biking. And it's incredible. Wonderful experience for the 50 million people that are within a driving distance of that property. But when you take the team that is optimizing that, and then you say, okay, now apply it to another resort or even a select service hotel, like obviously the part about maximizing skier visits changes, but like the underpinnings of that are similar, and which is one of the things I love about hospitality. Like, everyone is different, but we really think we're good at that. And we think we can apply it in a lot of different places, which makes my job super fun.
So I love it. So let's transition to where we are today, because everything you just said applies to here.
It does indeed.
It does. So tell me where we are today.
We're at the Sheraton San Diego Resort, which is located on the beautiful marina, if you can see out behind Teague.
Yes.
We'll walk and talk later. This is a little over 1,000 keys, 33 acres, right on the marina. And we bought this in 2019. So interesting timing.
Yep.
But the thesis here was, this was at the time a very dated conference hotel or airport hotel, is how you would have defined it.
Yep.
And our vision for this property, and I wasn't necessarily part of this, but the folks who originally bought it, so Dan Rowan would deserve full credit for this. The vision for this was, we're going to change this into a coastal California resort. So same box, same location by definition, but the transformation 110 million later has been unbelievable.
It is fundamentally irreplaceable real estate.
Oh, absolutely. We're right on the marina. You're a hop skip to the gas lamp district and the ballparks and everything else that makes San Diego amazing. Beaches are right up there. And we are effortlessly proximate to the airport. The naval base is right over that way, where you get to see all the helicopters taking off and all the action from the views that we have out of every room in the building. So yeah, it's a pretty special place.
So I'll say it a different way. It's an asset that can accept capital, except that 110 million is not
a small check.
Small check.
No.
And I guess the REITs, you bought it from Host, and
We
I guess
did.
so the REITs aren't really set up to be able to do these types of lifts, but you guys are.
For whatever reason, they didn't want to do that, and we did, and it's worked out incredibly well. This is a hotel that does over 300,000 room nights a year, and so roughly 130 group, but now at a much higher rate and higher profile than before. 130,000 transient, leisure-oriented transient, and then about 50,000 of more corporate and crew, just given the proximity. So we've got to try to be, sort of servicing lots of different groups and their preferences. But we have, right out here is the marina. There are people doing yoga on the lawn, out watching the boats coming in and out. We can take you out for jet skiing or paddle boarding. We can take you out for a boat ride. And if you want to pile in a bus and go down to the ballpark or the gas lamp, like we can take care of that too, and it's 10 minutes away. So it's a pretty great spot to be able to service all those groups, and very family friendly as well.
So has it worked?
Yes.
Yes.
Most definitely.
Yeah.
Yeah,
Happy that we spent $100 million. That was worth it. It's proven its concept.
Absolutely.
The thesis is right. Execution worked.
Yes, execution was fantastic.
I mean, cheers to you. And I was here last night, and boy, I think the place is slap full.
It's 100% occupancy last night.
Makes total sense. I mean, it seemed like there were 3 groups that were in here running around.
Yes.
All yesterday.
Yeah.
And some families and a wedding, and I mean, there's just everything happening. Which cheers to you guys.
Yeah. Well, when you have this size property, you can have disparate groups doing different things and all feel like they kind of have the run of the place.
Yes.
Right. And the bridal group, we do a ton of weddings here. Like they can have their rehearsal dinner in one place, like the ceremony in another, the cocktail party in another, the dinner reception in another, and the brunch the next day in another, and have all of them feel distinct and not have to leave the campus, which is fantastic. And of course, we want them to stay, right?
Of course.
But it's a great experience. And families are loving it as well, because you're hop skip up to the aquarium and the zoo and all that. So.
And the weather doesn't stink either.
No, the weather does not suck.
That's great.
Yeah.
Greg, this is fantastic. Thank you for sitting down with me.
Oh my gosh,
Thanks
my
for
pleasure.
doing this. I can't wait. Let's go walk this property. I want you to show me all around. We'll take the cameras. We'll show you guys around too. I'm impressed. This was great. Great
Thank you.
conversation. Thanks for sharing your knowledge and listening with us.
Oh, my pleasure. Thanks for having me.
Thanks, man.
Appreciate it.